Uh-oh, looks like you forgot to make or defer your student loan payments, and now you're in default.
Yep, that about sums it up. I don't know what happened. I just got behind so quickly.
Well, chin up. The good news is you have options. But first, let's talk about the consequences of defaulting on your student loans. First, there's the obvious hit to your credit. Your credit score will go down and your payment history will reflect missed loan payments. That happens when you fail to pay any kind of loan. You also may find yourself subject to involuntary wage garnishments. If you don't resolve delinquency quickly, you could start seeing money coming out of your paychecks without your consent. Yikes. They'll probably pause any benefits you were eligible for as well, like that deferment you got for grad school. They may even start taking your tax refunds to repay your debt. In other words, don't skip your payments. While student debt can be massively discouraging, paying your bills is always better than defaulting on a loan. With that out of the way, let's talk about your options for the future.
Finally, some good news.
Yes, some good news. There are 3 ways to address a defaulted student loan. The most efficient way is also probably the way you're least excited about, paying it all off up front. Depending on the kind of loan, the number of loans, the balance of each loan, and your financial position, this may be difficult, but if you can make it work, it's likely your best option. Even if you can't do it right this second, it's possible that it will take only a month or 2 of serious saving to knock it out and never have to worry about it again. Take a look at your balance and see if the amount is attainable. If it is, go ahead and just pay it all off. Your monthly budget will thank you and your credit will improve.
Yeah, right now that's too much. Is there anything else I can do?
Yes, that leaves us with 2 other options. These 2 options have pretty similar outcomes, but there are differences between them. The first is loan rehabilitation. This process may look slightly different depending on who services your loan, but generally speaking, the first step is the same. Contact your lender and let them know what you're looking to do. A federal student loan rehabilitation program will start by determining a reasonable and affordable monthly payment amount based on your income and living situation. You'll then sign a written agreement to make 9 payments in a row within 20 days of the due date in a period of 9 or 10 consecutive months, depending on which loan you have. Basically, you have to prove that you're a responsible borrower again. You will also need to send them a copy of your most recent tax return or transcript so they can determine what your rehabilitation payment amount would be.
What happens when the rehabilitation terms are met?
Your loan comes out of default and your lender will notify the credit agencies. With a loan rehabilitation, the default itself will disappear off your credit report. However, the effects of the missed payments that led to the default will remain. If you've been subject to wage garnishments, those will stop at this point as well. The bad news is your monthly payments will also probably go up. The adjusted payment you've been paying for the last 9 months was set to help you catch up, so payments will go up to their former rate within 90 days after the end of your rehabilitation term. You can use those 90 days to file for a payment adjustment in keeping with the flexible payment benefits of your loan. Keep in mind, however, that while that lower payment is easier on your monthly budget, it adds length and total interest paid onto your likely already long and high interest loan. Whatever you decide to do, there's one big thing to know. You can only rehabilitate your loan one time, ever. If you get into trouble again, this will not be an option for you. Use it wisely. You also have the choice to consolidate your loan. A loan consolidation is similar in some ways to refinancing a mortgage. It's essentially taking out another loan to pay off the old loan. This is a good option for you if you have more than one loan to consider. After loan consolidation, your multiple loans become one direct consolidation loan. It can help you keep track of future payments if you only have one payment to make. To initiate the process, there are 2 possible courses of action. You can either make 3 on-time, full monthly payments on the defaulted loan before consolidating, or submit to the terms of an income-driven repayment plan for your new direct consolidation loan. An income-driven repayment plan is similar to the way payments are determined for a loan rehabilitation. It's based on a calculation that looks at how much you earn to determine a reasonable monthly payment amount. Remember how that other option is a one-time only offer? Well, you can consolidate a defaulted direct consolidation loan again, but only if you're consolidating more than one loan. There are other minor restrictions for other kinds of loans too. So if you want to take this route, you definitely need to start by talking with your lender to determine your specific options. Another thing to keep in mind for a direct consolidation loan is that a loan for which wages are being garnished isn't eligible. You'll need to get those orders lifted before you can consolidate. In this case, you'll need to work with your lender and probably make some full payments before they stop garnishing your wages. There's one big negative with this option, however. The default will remain on your credit. It can be tempting to think of this option as a get-out-of-jail-free card, but that's unfortunately not the case. You'll hopefully be on your way to resolving your situation, but it won't completely erase all the consequences. I know what you're thinking.
So if I consolidate, whatever's on my credit stays on my credit?
If it is a legitimate claim by your lender, yes. Although you could hire a credit repair company. A credit repair company, like creditrepair.com, works with you to comb through your credit and contest incorrect, unfair, or unsubstantiated claims. If your lender can't verify the items on your reports, they're required to remove them. While there's no guarantees with credit repair, creditrepair.com can help you work to fix your credit overall, which could minimize the impact of the default. If nothing else, you'll get a free credit check and summary just for visiting creditrepair.com online.
Well, at least I know where to start.
Great! Starting is the most important step. Losing sleep over student loans while you're up to your ears in life is no good. Whether you're able to pay off your loans in full or choose to rehabilitate or consolidate your loan, the important takeaway is that there are options. If you're interested in learning more about your student loans and other debts, or want to repair your credit, creditrepair.com is here to help. Visit them online today. Be sure to check out the full credit repair tips playlist in the video description and leave a comment below to let us know what you think. Your feedback helps make this channel better.